Hello traders, Victor from TRADEPRO Academy. In today's video, I'm going to be doing something that a lot of people are not willing to do, and that is revealing my day trading futures strategy. This is not something I do hide. This is something very, very exposed and out there, and if you guys have been paying attention, you guys already know what I'm talking about, but I'm going to be breaking down my full day trading strategy to prove to you guys that it's not just BS and luck. Smash that like button, hit that subscribe button, drop a comment down below. Now, it's not a surprise to everyone, but I use two very simple tools, and that is number one, auction theory slash distribution theory, and number two, order flow. Now, I'm not here claiming that this is a 100% success rate strategy, right? There is a mix of discretion and non-discretion when we look at this strategy. This is a strategy that has a higher chance of success, right? Maybe 60 to 70%, and it has a high potential risk to reward. Now, a lot of this is based on how the operator operates the strategy, because it can go south very, very quickly if you don't listen to what the information is actually telling you. I have multiple losing trades, right? I have multiple losing trades a week, even a day, but at the end of the day, we come out on top. At the end of the week, we come out on top, and I'm going to be revealing exactly what those step-by-step processes are, but we're going to probably have to take a look at the computer at some point, because I do want to show you on a visual scale and not just blabbing here in front of the screen of what this actually consists of. Now, a little disclaimer before we do start this: I don't necessarily think that you're going to watch this video and be a 100% successful trader. I think that a lot of work and understanding goes into this, and I'm not going to be promising Lambos or Rolexes either, right? But if you put in the time and effort to understand this, you will see the market in a different light, understand how markets actually move, and this will give you an advantage in your strategy. So let's break this down. Number one, auction theory, distribution theory, right? This is based on volume profile and market profile analysis. Number two, order flow. Order flow is based on the depth of market and understanding how the tape moves and buyers and sellers interact with each other. So if we break this down even more simply, number one, where to trade. Number two, when to trade. So let's dive right into this. When we talk about distribution theory, auction theory, there's two main concepts that we have to understand. Markets, they move in two different ways: compressions and expansions. Or put in other ways, balance and imbalance. Understanding where markets compress, understanding where markets expand is a huge tool that can help you discern what the direction of the market is, what the expected moves of the market are, and how they necessarily move. Now, compressions are periods of balance where markets stay in a range. This happens 70 to 80% of the time. If you notice a market's in a range, you have to understand how wide this range is. Generally speaking, distributions can be found on a 20, 30, 40, even 50-point basis where they expand from end to end. So the whole point of this is understanding you're in a compressive period and being able to trade that compressive period. The basis of a compressive period is that you're in a balance where there's a multiple stack of high volume nodes that trade on the volume profile. In this area, there's a POC that's fairly close to the middle or some part like that. And what happens is there's general chop in this area. A lot of retail traders, a lot of just even institutional traders that just need to throw orders, put in size in the middle of these areas. Now, the key is at the edges, at the extremes of each of these distributions are where big money participants come out as strong-handed buyers or strong-handed sellers that reject or accept price into an imbalanced area. The imbalanced area is an expansionary area, which we call trend days or trend movements, where you can make the majority of your money if you figure these out. Compressions are where people lose, and expansions are where people should gain. So I do want to explain these in more depth, even using TradingView as a very basic foundation to understand where these distributions are, distribution theory and everything. We have a lot of videos based on this, so I'm not going in super depth, but I do want to explain those very key concepts of compressions and expansions and locating them so we can move into the order flow aspect of how to actually locate those buyers and sellers. So let's move over into a screen. You guys will see my face, but I'm going to be focused on the screen, so I might not be looking at you.
So as you guys may have been following, you know the basis of my strategy, how it works and why it works. Realistically, it has about a 70% success rate, meaning that if I take about 10 trades, on average, about 7 of them are going to be profitable, with the remaining 3 being at a loss. And on average, the risk to reward is approximately 2 to 3 to 1, right? On average, about maybe 2.5 to 3 to 1, meaning that for every 3-point stop that I take, right, I'm taking about 7.5 to about 9 points of profit. So with those results and whatnot, you guys can go and check out the spreadsheet that we have on our website that we've been documenting for the full year. But the premise of my strategy is generally twofold. It's reliant on distribution theory, right? Auction theory, and it's reliant on the depth of market. Now we have a plethora of different videos for you guys based on that, but I'm going to go through some of the basics of distribution theory and the depth of market that I use. And I'm going to show you guys some trades realistically that we had, right? One of the main trades that we were looking for, right? One of the main trade ideas and setups that we had that I do want to show you guys. Everything, plans, and even trades are mentioned in Discord, right? Our trade plan here, for example, I'm just looking for a continuous bid realistically, right? This is one of the sessions, the 29th, that I was going to show you guys. I'll show you guys a little replay of some of those trades, and I'll show you some of those trade entries and exits. But what I'm looking for is expecting bidders to show up right into the 22s and 24s, and the friends into 13s and 15s. So this was the main level where buyers showed up. So I'm just looking for dips into 13 and 15. That was our trade plan for the day on the 29th. So let's go and see how that breaks down. So let me explain the premise of the trading strategy that we use, right? Now, the trading strategy, like I said, it's not going to be something that's 100% of a hit rate, right? You have to understand that there are certain variables that do come into this. And the strategy is reliant on two main factors, right? Distribution or auction theory and the depth of market. Distribution or auction theory, we can divide it into three factors, but I'm only going to talk about two of them realistically. And one of them is the main aspect that we use is going to be a larger, right, volume profile. This larger volume profile is something that I use on a 50-day basis. So a 50-day volume profile. And then I also use the individual session profile, right? Each individual session creates its own volume profile. The one accompanied by this green market profile is the extended trading hours, and the blue one is going to be the regular trading hours session. So the way I like to use these profiles is understanding distribution theory in the way that you look at balances versus imbalances. Balances are bellies where price generally rotates. These are ranges where a lot of people can get caught out, but understanding that these ranges are actually compressions in the market, meaning that these are compressive periods where you have no new information technically coming into the market, and market just reigns sideways with strong-handed buyers and sellers trading the extremes, right? These are very important aspects because if prices open up within these distributions on a continuous daily basis, the expectation is that these distributions hold, meaning that if price opens towards the bottom of a distribution, right, my expectation is that we actually hold the bottom of the distribution. We can confirm that with order flow as well. So this is the extended hours trading session of the trade that I had shown you guys, right? This is the regular trading hours session of the trade that I've showed you guys. So when we come into this, you can see the bottom of the distribution here where this belly kind of gets exposed is somewhere around 43, like 08 maybe, right? So we're opening within the distribution. We're opening towards the bottom of the distribution. If I look at these individual session profiles, they have a gray value area and they have volume on the outsides of the value area, which are extremes. I like to look at volume extremes because they give me information of what is outside the volume of the value area that can give us an understanding of whether volume is thick or thin outside of the value area, suggesting possible strong-handed buyers or sellers. When you see green and blue at the bottom, it represents a large portion of the POC, which usually tells us that there's stuck traders and strong-handed traders at either bottoms or tops. So the fact that we have this area right here suggests that there is strong-handed traders and stuck traders at these lows, suggesting that the bottom of this distribution does hold for a potential push to the top end of the distribution. And we can confirm that with order flow that traders actually do accumulate, get stuck. So the premise of my strategy is, are we inside of balance or outside of balance? We ask ourselves this every single day. Inside of balance, I look to trade the balance. Outside of balance, I expect something like this, which becomes a trend day, and it becomes a market extension. So when we close outside of balance here on this regular trading hour session day, there is a pretty good probability that the overnight session does create an extension that would move towards the next balanced area. The fact that we open within the next balanced area, right, on this trading session, despite there being a lot of volume at these tops, would suggest a slight little pullback, but we open within the balance with the expectations that we do run to the top of the balance. So this is generally my whole strategy, right? Just broke it down very simply for you guys. Now we can go back and take a look at the individual replay to show you what I mean by traders on the actual depth of market and how we use it. There's a few different ways how I use the depth of market, but the main thing that you do have to understand is that my strategy is focused on the central columns along with market delta that's found on the left-hand side here beside the volume profile. The central columns, the red side tells me market sellers, the blue side tells me market buyers. And the important thing that you have to understand about reading the DOM is how they interact with one another. There could be market sellers on the sell side with larger digits, 300s, 400s, right? Suggesting that there's big market sellers coming into the market. Now, it's very, very imperative that when you see large orders like that coming in, they push prices lower. If they can't push prices lower on that big of size and market buyers come in sustaining price and actually moving price up, that creates stuck traders. And that's usually followed through with some kind of negative large delta on the DOM itself. So I do want to take a look at that replay. But before that, understand that we have a lot of this information for free on our YouTube, but you can also go and check out the free course that's on our website, free futures course that breaks all these steps down a lot better. Right. So if you want to learn more about this, there's all this information out there. I suggest you take a look at what we've got going on before you make any decisions going forward. So let's take a look at the breakdown of the depth of market at that specific time. So the understanding here is you see this large red block that sticks out. This is over 1,000 cell delta that comes out on this block. Right. The 1,000 larger cell delta, something like 1,000 over, suggests that there are a lot of stuck traders in that area into that 15. And as you'll notice, you can see the sell side of the columns, they're lighting up with the huge orders, 700s, 500s, multiple 600s, 600s continue at about 2 points, 800, 500, 600 again, 680. And what you'll notice is that price is no longer going down aggressively. When you have maybe 3, 4, 5,000 sellers. Look at that, 1,000 and 1,200 at that 14, or sorry, 1,200 at that 14. When you have large orders that come in like this and they can't go down aggressively, and all you see is aggressive buy side, right? Large buyers. This is where I start getting into this position because I wait for these sellers to get a little more trapped. And what happens is I look for the buy side. I look for reactive longs that come in, and they don't necessarily have to be bigger than the sellers. Because as I was saying, there is 600, 700, 500, 1,000, 1,200 sellers at these lows. You can see at 14, right? At 14 quarter, there's about 1,400 sellers selling at that low. And what happened is a 300-400 buyer comes in and actually rebids price on this massive offer. It manages to shoot price up a few points. That suggests that that's a massive stuck short on a reactive bid, where the bid is sustaining its price and actually getting stronger, right? And allows more buyers to see that these guys are actually super trapped around these 15s and get a constant rebid, helping prices actually push harder. So when you saw all those big sellers, like, oh my God, this is going down, it's about to break. But there was a pivotal point there where you got a 1,400, 1,300, 3 levels of 600 sellers coming in, right? And they can't press price lower. And one 340 buyer comes in and shoot price up by a point, 2 points. At that point, you have to understand that these traders are indeed stuck at these lows. And where are they stuck? Exactly where there was stuck traders on the overnight session, along with strong-handed buyers, suggesting that these areas would do really well to hold based on prior strong market participant entry, right? So you're seeing this DOM constantly light up bull, 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 bull. with big sellers coming in, but not actually moving price. All they're doing is providing liquidity for the buy side. So it might have looked like a bearish DOM on the way down from about 27, right? Down about 10 handles more, right? 13 handles. But it's a very, very bullish DOM because all sellers are getting disrupted by strong bidding that's coming into this market. So like I said, I wanted to prove to you guys it's not luck. It's a core strategy that has a pretty high success rate in comparison to a lot of strategies out there. And we've seen it work timelessly. A lot of traders have posted their best months ever over the strongest and hardest months to actually trade. A lot of traders have posted their only green months they've ever seen in a lot of these tough market conditions, just using a very simple strategy that I've just shown you guys today. And I've shown you how this strategy actually turned a very, very strong, profitable day, right? This trade alone was probably like a $3,000-$4,000 trade trading on the ES minis. And you can see this, unlike all days, was actually an extremely green day, right? No losses, just trading the plan, trading the value. But I guarantee you that not every day is filled with sunshines and rainbows. And usually I take a loss or two a day. So I wanted to prove to you guys that this is not just luck. It's something that we do on a continuous basis. And all we're using is very, very simple tools that you can find in any software, right? And the beauty of them is that they revolve around the most raw form of data you can find in the markets, and that is volume and order flow. So I really hope you guys enjoyed this video. Hope you guys enjoyed these replays that we've had, some of these recorded trades and whatnot. And I hope to see you guys in our next video. Remember, there is a lot of information that is available on our YouTube and on our website. Go check out the free futures trading course on our website. I hope you guys find it valuable. We have order flow and distribution theory broken down in it. And check us out at community.tradeproacademy.com. You can find that free course in the link in this bio for this video. And let me know, drop a comment down below. What have you learned at Trade Pro Academy so far? Has your trading gotten better? And I hope to see you guys in the next video. Hit that like button, hit that subscribe button, and chat to you soon.